Welcome back. Let's talk about the auto space. Now, yesterday we got the August sales numbers where the key trend was two-wheeler makers outperformed. In the four-wheeler category, passenger vehicles did well while CVs were under a bit of pressure. But now all eyes will be on the festive season to see if there is going to be any pickup in the retail sales. We have with us Abhishek Gaoshinde from Sharekhan now to talk more about this entire space. Abhishek, afternoon. Thank you for joining in. Now, two-wheelers continue with their outperformance, not just in the month of August, but even if you look at the numbers on a year-to-date basis. But stocks like Bajaj Auto have already done very well. In fact, Bajaj Auto is the top performer this year, calendar year 2024, with a 63% up move. So is there upside left in names like, say, a Bajaj Auto? And where do you stand on the other two-wheeler makers like a Hero Moto or a TVS?
So you rightly said that the Bajaj Auto has broadly outperformed the Nifty and the auto index both, and there was a certain reason that it has given such kind of outperformance, given that it has been largely considered as an export player. But in this particular year, when export has still to move up, the company has been largely positioning in the domestic market, and with its product mix and strong positioning in the premium category, the company has been continuously sustaining its 20% kind of EBITDA margin, and that has been reflecting in the kind of valuation which the company is gaining. Beyond that, its CNG product has also been getting healthy response in the market, and that has been fueling additional trigger for the company. And beyond that, what has been considered as a drawback for the company, that it has not been in the electric vehicle segment, but in this particular year now, if you take this advanced data, then it is market share in the electric two-wheeler space also been reached to around 18-19%. So all cylinders are firing well for the company, and that has been reflecting in the stock price and the valuations. Overall, we have been positive on the mass market players like Hero Motocorp and the Bajaj Auto, and now the valuation gap has been widened between the Hero Motocorp and the Bajaj Auto. We continue to like Hero Motocorp in the two-wheeler space, followed by the Bajaj Auto, given that Hero Motocorp is just trading at 20 times, almost 30-35% kind of a discount to the Bajaj Auto, and the kind of a revival we've seen in its EBITDA margin, along with the improvement in its market share in the EV space and its product launch plan. We believe that although the market valuation gap will not be breached completely, but there is a room for Hero Motocorp to improve its valuation from the current level.
Okay, Abhishek, we got that. So, we've got your view as far as Hero and as well as Bajaj is concerned. We also want your view as far as Eicher Motors is concerned. Eicher Motors actually in a month gone by saw a dip in sales both on a year-on-year as well as a month-on-month basis, and also appears to have lost a little bit of market share in the premium segment. So where do you stand as far as Eicher Motors is concerned? And in Eicher's loss as far as market share is concerned, which are the stocks or which are the companies do you feel can actually go ahead and gain further market share?
See what is happening that for last 4 to 6 quarters, if you see that the Eicher's quarterly volume for Royal Enfield, the quarterly volume has been stagnant between 225,000 to 30,000, and considering the kind of performance it has shown for last 1 to 2 months, I think that same would repeat in this quarter also. But what is changing in the Eicher Motor is that because of this Sherpa platform, the volume mix from the above 350cc segment has been rising, and now it is trending at 16-17% compared to the 10-11% earlier. So that will give some sort of a benefit to its ASPs. But you rightly said that as the mass market players are doing well, this particular player is not able to catch up the volume growth. Also, that will impact its market share, and it's in line with our investment thesis for the two-wheeler segment. We have been liking more of a mass market players like Hero Motocorp and Bajaj Auto compared to the premium iconic premium player, where the demand is still skewed towards the premiumization, but the premiumization has been happening in between the categories. It is not the same as was happening before COVID. So in that way, we are more preferring this Bajaj Auto and Hero Motocorp compared to the Eicher Motors. into bullish.
And what about M&M? That's been the second best performing stock, not just in the auto pack, but even for the market as a whole in the large cap space. So M&M is also up 61% on a year-to-date basis. Where do you stand on M&M? What are the triggers going forward?
See, for M&M, what is happening that it has been getting new capacities in the PV space, and considering that the PV segment is expected to grow by up to mid-single digit kind of a growth, but because of the new capacities, new product launches, and along with a healthy order book, we assume that the Mahindra and Mahindra may outperform the PV segment growth in FY25. And as earlier it was expected, doom kind of a bleak outlook for a tractor segment, but post Q1, the kind of a monsoon has been trending, and the kind of rural demand is picking up. The outlook for a tractor segment has been improving, and these both things are supporting the M&M. And beyond that, what is structurally happening in the company is that earlier its whole operating performance was dependent on the tractor segment only, but with this new success of the new product launches in the PV segment, gradually the contribution of auto sector in its operating profitability has been increasing, and this is auguring well for the M&M. Beyond that, its plan for this EV program has been on track, and that street has been liking so far.
Abhishek, what about Maruti? Management commentary has been quite muted in terms of PV demand. You've also seen the company go ahead and give quite a few substantial discounts yesterday. In that light, as well as the upcoming festival season, how do you see demand panning out for Maruti?
Firstly, Maruti is a representative of PV segment, given that it's a market leader, and you rightly said that the inventory levels are rising in the PV segment. And if you talk about the festive season, then there is a largely high base would play out in this year, because last year was very good, because led by the demand supply mismatch. I think last year in a 42 days for festive season, the PV industry sold almost 5 lakh 45 lakh 50,000 kind of per unit. So high base is there, and on top of that, the entry level segment is still to pick out, and that has been reflecting in its valuation of the performance. I think Maruti, if you take about the 1 year kind of a period, then Maruti is being largely underperforming to the Nifty Auto Index, and the larger part of its performance is driven by the earnings only. There is no major re-rating has been seen in the Maruti, which was seen in the other companies. So now what is happening, that the inventory at this point of a time, inventory is rising. Before COVID, we used to see that the pre-festive season, there is a period when OEMs build up inventory, and that has been utilized during the festive season. But what has been different in this festive season compared to the pre-COVID festive season is that, one, the size of the overall market has been increasing. So 30 days or 40 days kind of inventory previously, and now 30 days, 40 days kind of inventory have a different kind of financial pressure on the dealers. And two, the competition has been rising. So continuously, this players like Tata Motors and Mahindra are gaining market share with their new product launches. So these two things are putting pressure on the Maruti, and that has been reflecting in its valuation. What has been in hope currently is that the kind of inventory which has been built up so far may get clear during the festive season. And even if that would happen, the outlook for the overall PV segment would not change significantly, given the high base and the low retail uptick. So we believe that the valuations may stagnate for Maruti for a time being. Till then, breakout in its volumes would come out.
And if there is an increase in GST rate for the car seats, as we are picking up from our sources, then the cost of ownership for a four-wheeler also goes up. So that could hurt consumers over there, customers there. So potentially negative for a Maruti Suzuki. Abhishek, thank you very much for joining in. We'll slip into a break and come back with more.